Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I have forgone the usual daily charts and instead I have concentrated on giving a longer term view using weekly, monthly, even yearly charts, but rarely using daily charts. Now, if you'd like to discuss any of these charts, I'd only be too happy to take your call. So without any further delay, let me introduce today's longer term chart. Today I'll be looking long term at Euro Sterling. I'd like to start by reprising my opening from this time last year, and I quote, "The first thing to note here is that despite the very large range in 2020, we still had neither an annual key reversal nor a lesser annual outside year. On a fractal basis, we did have monthly key reversals up in February and also September, but nothing for the year. The move up during 2020 comes as a disappointment to those who followed the 2019 annual key reversal up." End of quote. The point of regurgitating that was that the showing of the occasional monthly key reversal up in 2021, in April for example, continued for a bit despite the market overall moving lower. The key periods of this move down were the January close below the important and recent 2019 to 2020 50% Fibonacci line at 88.86, and a subsequent close below all the moving averages in March, the first time that has happened since 2015. The market continued a slow move lower, almost channeling lower for the rest of 2021, and most recently establishing itself below the big 38.2% Fibonacci line for the 2006-2008 move at 85.52. It seems that December 2021 is about to finish as a monthly key reversal down. Yet there were two other features for 2021 that required discussion, one new and one ongoing. The new feature is the ragged bow tie formation made in July from the declining 1-year moving average, currently 85.80, the 2-year moving average, currently 87.28, and the 5-year moving average, currently 87.60. Now this bow tie is not perfect, but interestingly it looks like the moving averages went in and out of the bow tie in the right order. Hence, using July as a base, we should see a move in the direction of the moving averages, that is lower, or at the very least a significant start of some sort of move, between 15 to 20 months after the crossover. That would mean between the end of October 2022 and March 2023. Now I know that's a wide area of time, but that is what this bow tie formation demands. The second ongoing feature is the complex crown top that I highlighted over the last few years. This stretches from the end of 2015, and with the move down this year, effectively 2021 is an annual bearish harami. Well, it further supports this idea. This leads me to the final point I wish to discuss. I would like to echo the following from my commentary from last year, which was a reprise from the year before, back at the end of 2019, when we were then looking at the downside. And I quote, "Of course, it is completely pointless unless we can break the key 50% Fibonacci line of the 2006-2008 move at 81.66. End of quote. That is true today, this year, and also in 2022, as it was in 2019. The complex crown top cannot reach its full potential unless the key 81.66 level is broken. Not breached, you understand, but broken, and properly. That seems to be the interesting task for 2022, should the year choose to take it on.